Welcome to the AICPA Town Hall Series, your resource for the latest news and updates on pressing issues facing the accounting profession.
Good afternoon and welcome to the AICPA Town Hall. I'm Eric Auskerson, one of your hosts for today. You see that I'm with Mark Peterson from our DC studio. Today is July 9th, 2026. We've got a great program in store for you. First off, hope everybody had a great 4th of July celebration, the 250th celebration in the United States. Mark, a lot of good celebrations around the country, and also we're in World Cup fever right now. The World Cup is now in the quarterfinals, and one thing we always do is we will end today's town hall on time, because at 4 p.m. not that anybody will be watching, it's France versus Morocco. So, but Mark, it's great to see you.
No, it's good to be here. Yeah, it was quite a 4th of July in DC. Guinness Book of World Records was broken for fireworks. Went on for a long time.
Yeah, same here in New York City, and I heard great reports from around the U.S. So let's first just take a quick look here at the agenda. We're going to kick things off with a DC update with Mark Peterson. Then we're going to have an interesting discussion on it's a tech focus on AI's impact on tax transformation. We've got the CEO and founder of BlueJay with us today, and Brendan Alfrey, who's leading the tax transformation area for CPA.com. The three of us are going to have a good discussion on where things are going. Then we're going to have the technical update, and we're then going to have a discussion on moving from compliance to advisory mindset. That will be led by Aaron Hartman, and then we will close with the open forum. So, Mark, let's kick things off. This is not a picture of the fireworks. I guess maybe the morning after the fireworks in DC.
It is. So, Eric, I've actually been on the road quite a bit, so it's been a while since I was on a town hall. I'm excited to be back and get a chance to update town hallers. I'm going to start out with a little politics. Love it or hate it, the reality is it impacts policies that we care about. We can work with whomever's in charge, and we do and have and will. But when I make my observations, we got 117 days until the election. When you look at the things that we're tracking politically, redistricting, retirements, well, the primaries, the reality that the party in the White House usually loses congressional seats in a midterm election, and some of the economic polling numbers, you can see a couple things. One is there is a tailwind for the Republicans as it leads to redistricting. They're probably going to net some seats, but all of those other indicators I mentioned are a tailwind for the Democrats. And so when I put them all together, I think that it's decent possibility, if not likelihood, that the House will flip, which gives us divided government, which will be a different environment that we'll be working in. And we're starting to scenario plan around that in case that's the fact. Again, we'll work with either side. And so, you have to remember it's only 4 seats. 4 seats is the majority in the House and the Senate. Now, when I look at the Senate, it's a different map. It's only a third of the Senate that is up, every 2 years. So if you start in the South, you go Georgia, North Carolina, New Hampshire, Maine, Ohio, Michigan, Texas, and Alaska are kind of the states that you have to watch because it's in play. Now, the Democrats, in order to flip the Senate, would have to hold on to Georgia and Michigan and New Hampshire, as well as pick up 4 more in those other states that I mentioned. And so it's possible. 117 days politically is a long time. But picking up 4 seats in, when you look at Ohio and Texas and Maine, Alaska, it's going to be a challenge. I think it's much less likely that the Senate flips. But again, we play close attention to all that, Eric, and work with both sides, and then scenario plan how it's going to impact, what the next couple of years looks like.
Well, I mean, we're past the midpoint of the year, and as you said, 117 days. The summer is going to be over. We'll hopefully enjoy your summer. It'll be Labor Day, and then we'll be if you're in one of those battleground spots, you're going to see a lot of TV ads, I think.
You can't avoid it. So the other thing we got to start talking about this time of year is the potential for a government shutdown. So the end of the federal government's fiscal year is September 30. So they've got to get all the appropriations bills through the House and the Senate, reconcile them, get them to the president to be signed. That's not going to happen. There is about just north of 4 weeks left of scheduled congressional business. Now, they can stay longer. They can stay over weekends if they're close to things. Highly unlikely they get the bills done in regular order. So that sets up a continuing resolution or a kick the can down the road as it relates to federal funding. Eric, we've been here before. Neither side wants the government to shut down, but you got election year politics, and they also have to agree on whether they're just going to allow current funding or whether, other issues could be added to those continuing resolutions. I think there is a good chance we could see a shutdown. I don't think anybody wants one, but we could see a short shutdown. Impacts the IRS, rulemakings, a lot of things that we have going on with the agencies. So it's something that we watch closely. We'll see how this all comes together as we move forward, but it's definitely back on the table and something we're going to have to talk about.
Yeah, I mean, this would maybe be the final chance for the Republicans to get something through. As you said, it sounds like it'll be definitely divided Congress after the elections.
Yeah, if in fact the Democrats are successful in the House of Representatives, I should mention that one of the funding mechanisms could be this reconciliation bill that's bouncing around, because that only needs a simple majority, as you know. But currently, again, there's a lot of question what that's going to look like. Right now, it has primarily defense spending in it. They could include some of this other government spending. Whether the sides could agree to that, even to get a simple majority in order to kick down the can, unknown. Reconciliation, though, is a vehicle that can carry other things. So that's another opportunity we're looking at for some of our priorities.
Mark, how many more days do they have in session?
In session?
It's like 10 days left. It's like 10 days before the August break.
Oh yeah, 2 weeks. Yeah,
2 weeks.
In session, it's probably 5 days.
Wow.
So USMCA, July 1, the U.S. decided not to re-sign the agreement. So that had to be re-signed in order to be renewed. The U.S. opted out. Now, keep in mind, though, that the trade agreement is still in place. So all of the agreements that had been in place prior to this are still in place. What this does, though, creates uncertainty for us, because it will kick off basically an annual process where the agreement will be reviewed and changes would be proposed. So instead of a 16-year renewal, we're going to have basically an annual potential renegotiation as it relates to U.S. and Mexico. There'll be issues like labor, point of origin, agriculture. You can kind of start to see where this is going to get headed. Just kind of adds a little more uncertainty as it relates to trade. And we're going to be talking about tariffs as well. That's going to be a focus for us as we move forward. Again, in place for now, Eric, but it'll be renewed each year, basically.
Well, Mark, we jumped to the tariff slide here. You got, and it's usually 3-letter acronyms. We can remember 4, maybe 5. Forget it. So this is
the
International Emergency Economic Powers Act.
Yep.
So phase 2 opens.
This is one of the executive powers that the administration had in order to impose tariffs. There are others, and they're going to utilize others, but the Supreme Court said that they did not meet the definition of emergency. And so basically the Supreme Court said you have to pay back all of the tariffs that were collected. And so that process has started. There is a portal. So far, $104 billion in potential refunds have been started to being processed. They're entering the next phase that is a little more complicated. They have to discern between, the tariffs and fees that were related to IEPA, the Emergency Powers Act that the Supreme Court threw out, and other fees and duties that are actually still in place. That can be very complicated. And they also have to figure out point of origin and importer and lots of questions like that. So they're moving through that process. This will continue. The report, though, that Customs gave to the international courts was that it is all in process. Treasury's getting the money out. And so everything we're hearing is that this is in place. I think that the question mark, again, for business is, although this was overturned, I mentioned those other authorities the administration has, whether it's specific industries or specific sectors like lumber or steel, those can still be reimposed. So even though these refunds may be coming back in this case, they may go right back out the door based on other powers. So again, uncertainty is the word right now.
Yeah. So Mark, I mean, there's comments coming in. There's still people saying, "Hey, I'm still being impacted by tariffs." So there's still tariffs in place.
Yes.
As these refunds go on. And is there any date right now when these tariff refunds must be completed by?
Well, it depends on which kind of tariff it is. So yeah. if it was there was a set of tariffs that are actually phasing out right now, unfair practices that he had, I think it was 150 days. So they're going to have to renew those. So those could be the tariffs the comment is coming from. Or again, specifically, these are reciprocal that went after countries, between the U.S. and individual countries. If it was related to an individual sector or product, those are still in place.
Okay. All right. Well, we'll continue to track this on the town hall.
Oh, and here's another one, Eric. One of the bills that does get done in Washington, because it's a must pass, is the National Defense Reauthorization, NDAA. And it's become a bill that is being utilized for other policies to drive certain kinds of behaviors. We've followed contracting issues in here in previous iterations. So the focus of the provision I'm about to mention is on contractors. It's really focused on large, publicly traded defense contractors, and to make sure that with all of the public money, all of the tax dollars that's going to be pushed into those defense corporations, that they're using it to reinvest, and that it's not going to stock buybacks or to executive comp. The problem is that's the intent. Now the problem is the way that it is written. If you're a partnership doing defense work for the Department of Defense, you're not going to get paid, because we believe the way they've articulated in the language, capital distribution would be the same as a partner draw, and would not allow for payment. And so this is in the Senate version of the defense authorization, is not in the House version. We're on the Hill talking to folks. We've joined with the Chamber and a large business coalition in order to elevate this as an issue. The intent, we understand. However, we don't believe they meant to capture partnerships like the accounting firms that are doing accounting, audit, or consulting work for Department of Defense.
Okay. Well, we'll keep tracking this.
Yeah.
And Mark, a lot of questions just, came in on the tariffs. One question that has been coming in on the last couple of town halls is, okay, how about the people who bought a product that was higher priced due to the tariff? I mean, it's like, who's getting the refund? So
the consumer,
I'm sure is that being talked about on the Hill?
Absolutely. There's lawsuits. Yeah. There is no federal mechanism that forces an importer to pass on this refund to the consumer. So there currently is no mechanism for that. If ultimately there is some money that comes to the consumer, it's going to be through specific legal actions in my mind. I think this is going to get discussed because there's empathy. There's just no mechanism.
Yeah. People who bought high cost purchases like a car or something like that, saying, hey, I know this cost $2,000 more because of the tariff. So
yeah,
to be seen. Okay, thanks, Mark. We'll look forward to having you back at Open Forum. I would now like to move to the tech discussion, from tipping point to mainstream: AI's impact on tax transformation. So I would like to welcome Ben A'Leary and Brandon Alfrey. Both have been on the town hall before. Ben is the CEO and founder of BlueJay, and Brandon Alfrey is leading the tax transformation area for CPA.com. So looking forward to an active discussion with both of you. I don't know if we've got a slide issue here. I think it's been corrected. If we did have one fixed, they tell me. Excellent. So let's kick things off. This was a survey that we did with BlueJay to over 1,000 U.S. tax professionals, and we kind of took a snapshot of. And there was also a survey done in 2025, so some interesting kind of trends here. And Ben, I want to bring you in first here. When you look at, has the firm adopted AI tools? It was 33% in 2025. That grew to 60% as of March of 2026. And then you can look at, plan to adopt, considering adoption, and the growth in both of those categories. Ben, I know you've got some interesting reflections when you've looked at this data, and we're also going to talk about where we think it's going.
Yeah, Eric, for sure.
Great to have you here.
Thank you. Pleasure to be back. When I look at this, one thing that jumps out at me is, 33% of firms a year ago, back in 2025, said that they'd already adopted AI for tax research. At that point, only 20% said that they were planning to do that within the next few years. You add those two figures up, you've got 53%. In our most recent survey from March, a year later, 60% had already adopted AI tax research tools. So we had firms who surprised themselves by adopting AI tax research tools by March 2026. Now, what's telling is in that second row, 60% have already done it. Another 32% are now saying that they expect to do it within the next few years. I think they're going to surprise themselves again. And I think when we do this survey again next year, it's going to show essentially all the firms have adopted AI for tax research. And I think this is, I'm curious about what you think about this, Brandon. I think this is maybe one of the fastest tech adoption stories that we've seen in the profession for a very long time. If you think about the migration to the cloud, that took place over the course of more than a decade. This is over the course of just a couple of years. It's happening, and so I think it's really exciting. I think the title of this segment is From Tipping Point to Mainstream. I think that's exactly right.
I would totally agree, Ben. When you look at this and my 20 plus years in the profession, nothing has moved as fast as the adoption of AI, especially in tax research. Excuse me. It's proved its worth and what it's going to do for the profession. And now we start to see that trickling not only into tax research, but how do we move that now and go to use AI to make us better trusted advisors in an advisory sense?
Yeah, well said. And I think next year it will be table stakes to be using AI-based tax research. So, and just the usage of the tools. I mean, BlueJay is one of the leading tools. You've had over 10 million questions asked now, and you're doing well. Your run rate is well more than 1 million a month now.
Yeah, that's right. Eric, you asked me in the green room before we got on here, Ben, how many firms are now using BlueJay? And I told you, well, let me check. And it was 5,764. That number has now ticked up since I answered the question, half an hour ago. Firms are actively adopting this technology. They're getting a ton of value out of it. And the story here is that it really is effective. It really does work really well, and it gets better as more firms adopt it. We are able to refine the algorithms, refine the approach, get BlueJay to provide even better answers for everyone's benefit. So it's the sort of thing that's a self-reinforcing trend here.
Well, let's dig into this. We got some interesting additional data from this survey. So I thought this was a great question. What are firms doing with this time back? So 50% say they're improving client service. Wonderful to see. People are also leveraging this to kind of, have a better work-life balance during this, the tax compression season. And then also people are thinking about higher quality. So Brandon and Ben, I know you've thought about this.
Yeah, I'd love to point something out here, which is clients benefit in two different ways here. One, they're hearing back more quickly from from their tax advisor, which is terrific. As a client, that's what you want. Even during busy season, if people are able to get back to you, that's a phenomenal benefit. And then, of course, if you're going to get higher quality advice, that's fantastic. There's a hidden box here. So that middle box, improving work-life balance for staff, I think that's exactly right. I think that's fantastic. If people can leave a little bit earlier and get home for dinner with their families, I think that's fantastic. I think the hidden box here is that does improve the amount of time that you're able to spend at home. It also means that the time that you're working is more pleasant. So when you are leveraging AI tools for tax research, it's like mowing the lawn with a power mower rather than a push mower. And it actually just makes the time that you're spending at work that much more pleasant, because you can get back to your clients faster, because it's easier to produce higher quality work product. And so it improves the amount of time that you're not working. It also improves the time that you are at work. And so that's the missing box here. And that's what reflecting on these numbers says to me.
That's a great point, Ben. I was just talking to a firm the other day who was mentioning something similar that said, hey, what we're allowing our people to do is not get caught up in all the drudgery that they used to do, spending time digging through the code, digging for the right answers, digging for all the possible links that might be related to what we're looking at. We're now looking at it and saying, we're freeing these people up at this time so that they can look forward to coming to work and being able to actually provide solutions and opportunities for the clients that they're working on, which is a tremendous benefit, right? When you look at that. And then I also look at it and say, like, with this extra time, we're improving the way that we react to the clients, which just continues to build trust. And it's almost as if, would you like to take that time and invest the time that you've been treating your clients on an advisory standpoint with 10x of the time that you have been doing it? Or would you rather take that and try to create more work? I think the study has shown us that, like, when you invest in your clients with the advisory opportunities, you get lots more work and lots more value out of your clients, and then you give more value to your clients as well.
Well, the questions are pouring in, and we're at 100 questions. I think we might be even at a record regular attendance here today, about 14,000 attendees on with us live. So one of the questions that's coming up is related to billing. So shifting value drivers for clients, 69% of firms are considering an alternative to hourly billing. So Brandon, Ben, how do you see this?
Well, I'm happy to start. I mean, this is no surprise. If AI is allowing, a tax person to spend less time, fewer minutes, fewer hours delivering the services, and they're providing higher value output, higher quality output to those clients in a more responsive way, clients are experiencing a significant uptick in the value that they're getting from their tax advisors. It has to work for the tax advisor too. And so it's no surprise that the moving part here is, okay, how do we adopt a hybrid billing model? How do we move to more value-based billing? How do we move to fixed fees? Firms are exploring all of these things. I think, it's not a surprise to me that more than 2/3 of the firms who responded to the survey are saying that they're actively exploring this stuff. We've seen it on the compliance side where there has been this shift to more, fixed fees for return prep and that sort of thing. That makes a ton of sense. I think we're going to see it right across the board with tax services going forward. And it feeds directly into all the work that AICPA, CPA.com are doing on tax transformation, which I know we're going to talk about in a minute. But this is exactly the reinvention that we want to help encourage in the profession. I think it's spot on. And firms are already thinking this way, obviously, based on the survey results.
Yeah, I couldn't agree more. I think it's been, 20, 30, 40, even 50 years for some people. They've been doing the hourly billing model. And now it's called into question about how quickly we're able to get work done. You even just look at the IRS OPR guidance that came out a week or so ago, right? It talked about the way that we should use AI in tax preparation, and it gave us a a warning in there almost. If you think about it from a pricing perspective, it said that time savings that we get from using AI should be reflected in the cost that we charge our clients. But that if we're not charging hourly and we're moving to a fixed fee and charging based on value, then like we're still going to use AI responsibly, but we don't have to really worry about how the IRS is going to judge us for that.
Yeah. So a lot of questions coming in here on the how. How do I move from hourly to value billing? And Brandon, these are the kinds of things that you're thinking about. We actually have that tax transformation framework that gets into some, concepts and strategies related to it. We got to but we're going to keep moving here. And as we put this slide up here talking about a new model for developing judgment, I do want to kind of hit on one question. Questions are coming in on at times, is the accuracy of the answers, and at times there may be something that I question. So Ben, this is something that you have dialogue with firms on all the time. So, and they're looking at the different models from ChatGPT to a BlueJay to a CoCounsel and other. But how do you? Then this is where the judgment comes in.
Yeah, 100%. So one of the things that we're really, taking a lot of pride in at BlueJay is the quality of the answers that BlueJay is producing. No model is ever going to be perfect. It's the professional responsibility of the user to ensure that they are double checking the responses, they are going into the sources. BlueJay does everything to make that double checking as streamlined and as straightforward as possible by including the sources right there in the platform. One of the really important questions that comes out of thinking about leveraging AI for tax research and for tax work more generally is, how do you become a sophisticated user of these tools? How do you exercise your professional judgment? Because increasingly, clients are going to be using these tools, juniors are going to be using these tools, and you can really add a ton of value by leveraging your professional expertise in using these tools very effectively to surface the right answer, and then having the knowledge and the judgment to validate that as being the correct answer, knowing that it's substantiated by the appropriate authorities. Now, it's something that a lot of firms are grappling with. We hear it all the time at BlueJay from firms that are bringing on BlueJay. Okay, BlueJay, we want to bring it on for everybody. We are a little bit, thinking about how do we make sure that juniors are using it responsibly. And we explain, we have, pretty rigorous onboarding that all the juniors go through. Everyone in the firm who's interested in going through the onboarding will experience and benefit from. One of the things we're doing at BlueJay now as well is reaching back into academic programs. And I'm really proud that we are making BlueJay available to full-time tax academics in accounting schools, business schools, law schools, on a complimentary basis for them to support their own research, but then also for their use in the classroom. And so we'll provide accounts for students. So our ambition is students come into the profession as juniors ready to leverage these tools in a professionally responsible way, knowing how to validate tax research answers that they're generating using AI.
So Ben, on that, you kind of jumped the announcement, but I did move to the slide. And the last slide talking about how to develop that judgment with the younger staff. Same concept here. And I think this is a great initiative that you're launching. You're going to be announcing it next week on this faculty hour that the AICPA holds with many faculty at universities and colleges around the country. And so this is here. What you're offering is free access to the faculty and their classes at an accredited university or college. So, and these are the different steps that the teachers can leverage to kind of build that judgment.
Yeah, and one of my co-founders of BlueJay, Professor Albert Yoon, leads our academic liaison program. He's really happy to support tax faculty advising on, how to approach this in the classroom, syllabus development, collecting best practices from faculty across the country and spreading them around so that we're there not only to provide the tooling on a complimentary basis, but also, real-time coaching about how to leverage this technology in the classroom to benefit faculty and students alike.
Well, this is one thing at CPA.com we're going to be, being more active in is just helping the students and the universities and colleges leverage some of these modern technologies. So when they come out, they're better prepared to be working in the firms from day one. So that's exciting. I mean, it's a great program. We'll be putting out a press statement on that next week with more information. And I know we have a bunch of educators on today's town hall. So more to come on that. Brandon, maybe just a lot of the questions coming in can be addressed through some of the tax transformation tools that you're putting in place.
Yeah, absolutely. Right. Like today we're talking about tax research with AI and how that's impacted firms or whatever. But what we're looking at now is like, where does the next evolution go, right? When we talk about transformation, we're talking about it being an intentional evolution of your tax practice, looking for the advisory opportunities that are there, because AI is going to help you come in and help to manage the compliance work that you used to do, creating more time. So as AI comes in and creates the capacity, you're gonna have time to do advisory work, which creates more value for you and for your clients. And at CPA.com, that's our focus. We're trying to help firms understand not only how to use AI to get to this place, but also what advisory means for you as a firm to move forward and really become a true trusted advisor to your client in a better sense of the word than we ever knew.
Well, great discussion with both of you. We could continue on, but we do have other segments here. But what we have here in the resources is we've got that full tax research report, some really interesting information. It looks agnostically at the category and what's happening with tax research. Brandon just talked about the tax transformation framework tool. We also are doing a benchmarking survey right now, which I encourage you to take. And because this will help you benchmark your firm against other firms. By taking the survey, you get access to additional information, and we look forward to discussing that on a future town hall. When does this survey close, Brendan?
The survey closes at the end of this month, July 31st. So we'd appreciate you give us 30 minutes of your time and see what you can learn from it.
Ben, any closing remarks from you?
Well, I'm really excited about what's happening with Blue Jay, with tax research, and really harnessing AI for the profession, and really appreciate the opportunity to talk about what we're doing for the academics. So as a law professor, tax law professor, that's where my heart is how do we help in the classroom and educating the next generation to benefit them and benefit the firms that they're going to be joining upon graduation. So thanks so much.
Yeah, thank you. And I think in a future town hall, I mean, we've talked about where things are today, but there was comments about agentic, workflows in the comments here. That is where this is all going. It's going to be, you're going to see a lot of tax workflow capabilities. We're going to continue this discussion throughout this year, in particular as the fall season starts. Because next year is going to be dramatically different, and there's going to be a lot of other services beyond tax research. I'll give you one last comment just on that, as how you see this kind of shaping out.
Oh yeah, I mean, one of the amazing things that we have a front row seat for at Blue Jay is what are people actually researching, and what are the workflows that research kind of feeds into. And so we have a very exciting roadmap of workflows with literally dozens of different very, very commonly done tasks that this tax research is supporting. We're building out into Blue Jay. And so the product a year from now is going to be incredibly broad, and the tentacles are going to spread out and actually service very directly a lot of the work that tax people are doing right now. It's memos, it's emails, it's responding to IRS notices, that sort of thing. It's going to be much more focused and able to do a lot to support the users of Blue Jay. So I'm really excited about the roadmap that we have at Blue Jay. We're already testing with a small number of firms. And if that's something of interest to you, get in contact with us and we can have a conversation.
All right. Well, thank you. Thanks, Ben. Thanks, Brandon. Brandon, we'll see you back on the open forum. Thank you very much.
Thanks.
Okay, now would like to move to the technical update section with Daniel Huff. Daniel, welcome.
Thank you, and good afternoon, everyone. So last town hall, we discussed the National Taxpayer Advocate's annual report to Congress from a filing season performance perspective. And this year, we want to touch on some of the key areas of focus in that report. So we'll start off with paper checks. IRS had sent about 4 million CP53E notices as of the end of April. And most of those taxpayers ended up waiting the full 6-week period in order to get their refunds. Just to give an idea of who was primarily impacted, the median AGI for those taxpayers that received those notices was about $53,000. And then when it comes to the accepted taxpayers who were able to get paper checks, there were only about 55,000 of those waivers that were submitted, and their wait time was still about 4 weeks to receive that check. So many of the recommendations in the report mirrored the recommendations from our previous comment letter, clearer guidance and communication, and a way for those accepted taxpayers to self-identify either before or when the return is filed. Also, if you do believe that your client has received an erroneous CP53E notice after you've checked the transcripts, please let us know at that email address at the bottom. Identity theft case delays continue to drag on. That's another big issue in her report. Digital asset reporting. The existing 1099 DA framework, it really does cover most digital asset transactions, but there's still a few gaps in interbroker reporting and decentralized accounts. The NTA actually cited a report or a study in that report that only 32 to 50% of taxpayers are reporting digital asset transactions, which really reflects that a lot of taxpayers may be unclear about the reporting requirements. So she's recommending a voluntary disclosure program so that taxpayers can report prior transactions, come back into compliance. And in fact, a bill was recently introduced in the House that would do just that. And then last but not least, refund claims and protective claims arising from Quang. Yes, the deadline for that is tomorrow, but NTA estimates that there's tens of millions of taxpayers that may be impacted. To give an idea of who this is impacting, about 39% of taxpayers that were assessed penalties during that COVID disaster period, they had AGI under $100,000. And so she's recommending an automatic refund process to avoid the need for those refund claims. Plus, she states that appeals is simply not set up to be able to handle the influx that they'll be experiencing. She's also recommending a 6-month extension for those claims. And then on the next slide, we'll get further into Quang. On the next slide, so the IRS Independent Office of Appeals, they released an internal memo reiterating the position that the COVID-19 disaster relief only ran 60 days from that January 2020 date. If you could go to the next slide. So appeals will consider these claims, but of course, that's a very narrow window, 60-day period. Then they moved on to penalties and interest that arose before the COVID-19 disaster period. They're saying those are just ineligible. We've seen a couple cases involving this type of scenario, and the tax court has actually is allowing amicus briefs to discuss this issue. And then finally, appeals stated that refund claims for penalties and interest arising during the COVID disaster period, that those won't be considered at the moment, just for the sole purpose that the Quang analysis is not unreviewable, so they can't rely on it just yet. So last week, the IRS announced an electronic submission process for those claims and a single mailing address on the slide there for paper submissions. But of course, that raised a lot of questions. So we reached out to the IRS. We're still waiting to hear back on some of those questions, but they clarified that electronic filing and the consolidated mailing address, that is for refund claims, not protective claims. Protective claims should still be sent to according to Form 843 instructions, which is the address for the tax return. The IRS also reiterated the importance of using certified mail to support timely and proper filing. So we'll keep you posted with any further updates on that. On the next slide, many practitioners have been concerned about the gift tax filing implications for contributions to Trump accounts. On June 29, IRS released RevProc 2026-25, which provides a safe harbor for those contributions, not to be treated as gifts of future interest and therefore eligible for the annual gift tax exclusion, as long as they meet the following requirements. So the taxpayer must be an individual. The taxable gifts there's only allowed to be taxable gifts that are cash contributions to Trump accounts, and those are still taxable gifts as long as they don't meet the safe harbor. So that's why they use that term. The total gifts, including the Trump account contributions, may not exceed the annual exclusion amount. And then contributions may not result in a gift or GST tax liability after you factor in the applicable exclusion amount and the GST exemption, which seems to be more of a backstop for the GST exemption if that's fully used. And then no gift tax return is otherwise required, normally for portability or gift splitting. So we're still awaiting guidance, but this does address a significant concern. And for more info on those Trump accounts, you can access our resources linked there on the slide, available to our PFP and tax section members. And then on the next slide, this dovetails with our last session. The IRS released that guidance clarifying how Circular 230 applies to AI use by practitioners. And so ultimately, AI research, it's permitted for research, for drafting, for analysis, but practitioners remain accountable for that final work product. Circular 230 fully applies. There's no exceptions for AI use. Practitioners must continue to satisfy due diligence, competence, and firm oversight requirements. Human review is essential. Facts, calculations, authorities, those all must be independently verified. Confidentiality and data protection are critical. So, don't upload any data into public AI tools. Use only safe and secure AI tools, and understand how your vendors are collecting, storing, and using that data. Firms should also establish AI governance frameworks. So OPR's message is not don't use AI, it's just use AI responsibly. And then on the final slide, we're just going to cover the first two. Notices for frivolous returns. We did receive some feedback about an increase in letters 3176C that the taxpayers and practitioners have been receiving. There's no specific information on there about what could be frivolous. And we reached out to IRS just to confirm that they were authentic. And they confirmed that IRS wants the taxpayers to reach out to them as a first verification step. The links there will take you to, the first link will take you to issues that could trigger that. Let's say the sick and family leave credits, fuel tax credits, those have been on the Dirty Dozen list. There's also a link explaining what the IRS deems to be frivolous. So if your client did receive one of these notices, you may want to take a look at those resources. And the final one, the IRS announced their new automatic exemption from penalty program. That's going to replace the first-time abatement program. It's essentially the same mechanics that require a 3-year clean compliance history, but it's automatically applied. So they're phasing that in right now. They're phasing first-time abatement out. First-time abate will be fully phased out for 2027. So that wraps up our technical discussion. I'll pass it back to you, Eric.
Hey, thanks, Daniel. That was a great review, and we'll take some questions during open forum. So thank you very much. We're now going to moving from compliance to advisory. It's a great kind of a follow-up to the earlier discussion we had on the AI's impact to tax research. So I'd like to bring Aaron and Chet up. And Aaron, I'll let you introduce Chet, and looking forward to today's segment.
Great. Chet, we are glad to have you with us today. Chet Buckman is the managing partner of Swindle, Jansen, Hawk, and Lloyd, which is a full-service accounting firm with locations across Kansas and New Mexico. Chet has been the managing partner since 2014, and over the past 12 years, he's really made a conscious effort to move the firm to more of an advisory mindset, which has included identifying the right clients and moving away from some of his legacy clients. Over the past 12 years, he's expanded the firm's number of offices and has grown the team from 35 team members to upwards of 150 team members now. And today, Chet is here to talk about a conversation that is happening across firms of all sizes with the idea of moving from compliance to a more advisory mindset. The segment we just listened to, as Eric mentioned, with Brandon and Ben on tax transformation sets us up perfectly for that subject. But many firms can feel like this is overwhelming. And Chet really has a unique ability to make the concept feel practical and achievable through what he calls operationalizing the more. And not surprisingly, for those of you who know Chet, his thinking is rooted in a book. Chet is the founder of First 15 Reading Program, which is a program that's a big part of his firm's culture that focuses on office morale and the importance of embracing lifelong learning. He has shared this resource with us, this program. It's been a very popular PCPS resource for several years. We'll touch on more about that as we talk. So let's dive right in, Chet. What do clients really want from their CPA firms right now?
Yeah, thanks, Erin. Thanks for having this discussion too. To keep it really simple, they're looking for more. And what's really interesting, when you spend time, good or bad, talking to new clients or looking at making a change from a previous CPA, they always say things like, they don't say more, but what they say, I think my accountant's really smart and I think they do a really good job. However, what I would really like is if they would return my calls, if they would reach out proactively, if they seem like they cared about me a little bit more. At the same time, on the private side, what I hear working with clients is they say the same thing about their CFOs or internal accounting team. They're really good people. I feel like they're really smart. I feel like they do a good job. I just wish they could be more like a CFO. And so in the client's mind, they're thinking in terms of someone to be there, help me, have a relationship with me, help me be more strategic and make more informed decisions.
Now, you've said that much of your thinking about this comes from The Fred Factor, which is a book by Mark Sanborn. For those of you who haven't read the book, how does this connect to the advisory conversation? And don't give too many spoilers because everybody's going to want to read the book.
Yeah, I know. Oh, it's so hard too because I get really excited about this one. It's my favorite book of all time, and I have them here with me kind of at all time. The first book maybe I read, the first version was 15 or 18 years ago, and then Mark updated a version here. The 20th anniversary here a couple years ago. So without spoiling it, it's a quick, easy read. What I like as a starting spot, for most people, when we say advisory seems like a really big, daunting word, task, something that's overwhelming, hard to really understand, very ambiguous. And what I look at is I think at first it's important to look at advisory and define it. And this is an unofficial Chet definition, but it's really taking what you know and using it to help someone. And what I find is a lot of accountants have all this latent potential in us. And we became accountants mainly because we're good with numbers, we like to help people, and we want a professionally rewarding career. What we find is sometimes there is a gap though between wanting to help people and actually helping them. And so what I found is there's what we look for is a really easy starting spot. And when we think about advisory, we're trying to get our team to be more advisory oriented, or accounts to be more advisory oriented. Really what we're trying to do is, if we go back to pre-algebra days, we have this equation. We have accountants times behaviors equals results. And what we're really trying to do is we're trying to say, hey, we're trying to get different results with the same people. So then the thing that would have to change would be our behaviors. And so when we think about our behaviors are what we routinely do, which are typically a byproduct of what we routinely think about, which are rooted in what we believe and what we identify as. And so for accountants, what I found is one of the simplest first steps is reading a book like The Fred Factor and identifying with Fred. And what the Fred Factor is all about is Mark's postal carrier, Fred. Mark moves to a new town and is used to getting treated a certain way by his postal carrier. It's not good, not bad. Mail shows up, no problem. Fred is somebody different. Fred totally transforms his viewpoint on what it means to be a postal carrier, and helps. And I won't spoil it, but it's great. And so then also when I think about it, when you asked the question before, what are clients really looking for? And what are our users of our services looking for? And what do they want? They really want a Fred accountant.
Someone who goes above and beyond.
Right.
So when you think about advisory, you would suggest not jumping ahead and focusing on a particular service line first, but really taking a step back and focusing on a mindset change and a different way of thinking. Is that accurate? Okay.
Yeah, I really believe it's a choice. Like, it starts with an intentional effort to be more, and again, I don't want to keep looping back to Fred, but making a decision to not just do the numbers, but make a decision on a daily basis to help people with them. And it is a choice. So it's like in our heads, we have the opportunity to either be an accountant or be a special accountant, or what we call like a Fred accountant. And I believe that's a mindset and initial choice that needs to be made.
Okay, so let's talk more about more. You use the phrase operationalizing the more. And what does that mean inside of your firm? And how do you reward that behavior internally versus outputs that are more quantifiable, such as billable hours?
Yeah, we like to keep it really simple. If we go back to like how to build our business model, we go back and look and say, hey, the clients that are looking to make a switch, what are they looking for? And can we find the simplest things that they're looking for and figure out a way to operationalize it? And so what they're looking for more wise really boils down to what you see on the slide. They want us to become more responsive. And so an example of that we have is responsiveness is something not only we talk about, we measure, and then we set parameters around like, hey, our standard, and we're not going to be perfect. Our standard is to respond to all client communication, all internal communication from team members within a 24-hour period of time, and really working hard to adhere to that and developing that behavior of being responsive. And then, as you can see, other easy things to do would be like an intentional effort to be more regular with clients, to meet with them on a regular basis. And if you think about what we're really trying to do here is build a relationship. So when we're more responsive and we're more regular, a simple thing we do on the regular side is much like when you work with a medical professional. Typically, when you leave their office, before you leave, someone up front schedules your next appointment. So we try to wire in that mentality across our accountants that, hey, after you have a meeting with someone, go ahead and book the next one, which also works well in your professional life. So if there's people in your personal life, there's people in your professional life or your personal life that you want to have a better relationship with, you have a good time with a friend, go ahead and within the next 24 hours, book the next time that you guys are going to do something together. In addition to, we try to wire in and teach people to become more proactive, read the book, The Fred Factor, become more Fred-like, which is doing simple things, doing little things for people, also just kind of wearing smiles more, being more friendly, having a better attitude as we approach our day. And then everybody likes GSD. Hey, let's get better at just, and again, like going back to previous conversations here during this town hall with what Blue Jay is doing and what Brandon, Eric, and Ben were talking about, the power of that to be able to more effectively provide our clients with what they're needing faster. And then everybody loves tax savings. So when in doubt, if you can help people save money in tax, they love you.
Always a win. So I do think many firms understand the value of the advisory mindset, but a lot of them struggle with the execution. So practical question, how do you decide which clients are ready for this, and how do you communicate that and price that?
Yeah. So what we like to do is look at, take Pareto's rule and focus on your top 20% of your client relationships and start where you're at now. And there's this old adage that's kind of gone around, or old question that's gone around for a long time. What came first, the chicken or the egg? In our case, we don't care. We're just going to go first. So what we really try to teach is start transforming your best relationships now. And when you start with your best relationships It's really easy, and it's a self-reinforcing feedback loop. People like and enjoy the time you spend with them. And we also encourage people to practice with their personal relationships. So start with your best relationships, practice, build the habit, and start forming new behaviors.
Great.
Well, Aaron in chat, I mean, that was fantastic. We might get to a question or two during open forum, but we're gonna move on. I got a special guest here in the New York office who I want to introduce. So with that, I do want to move to resource and other updates, and you can see Lisa Simpson was in town for some meetings, and she just popped in. Welcome, Lisa.
I couldn't stay away. So thanks for letting me sneak in just to say hello and to say hi to Chet. I've known Chet for years, and I really value what he's done with his firm and the mindset that he's bringing to the profession about, transforming the way we serve our clients. And the podcast that you saw as a link on the slide there is amazing. It talks about some of the challenges that you might face with clients who you're going to run into at the grocery store or you're going to see at church. And how do you face them if you've tried to find them a different home? So great stuff. And again, happy to sneak in for just a few minutes.
Oh, it's great. It's great to see you. Hope you had a good 4th of July and are enjoying a little World Cup. We hit that at the start.
Absolutely.
So a couple of resource updates here. One, digital CPA will be occurring at the end of this year. Still an opportunity to take advantage of the super early bird pricing. On the next town hall, Mark Koziel is going to be joining us as well, but we're going to have the CEO of the American Bankers Association on, Rob Nichols. He was on a few years back. Rob's going to tell us, give us an update on the state of banking here in the U.S. He supports 5,000 banks, talking about some of their top issues, fraud, what AI is doing in banking. It should be a very interesting discussion. So and he's going to be here. He'll be here in the studio, Lisa, with us as well. We have a new offering that we're going to be making available here on the town hall. And this, Lisa, this is based on feedback that we've received from both firms and members in business and industry who have colleagues who are part of their finance team, part of their firm, but they're not CPAs, they're not AICPA members, so they don't have access. So we now have an ability to let them register for the town hall. So you can go to the cpa.com/town hall. If you're an AICPA member, there's a path. And if it's one of your colleagues, they've got a path for registration.
And I think this truly reflects what we see happening in firms today, which is as they're expanding the types of services they're offering, they're bringing in different types of talent to meet those client needs that we've been talking about all hour. So I'm excited to welcome them into the town hall community and also our friends in business and industry, not-for-profit. So yeah, I love talking to anybody who will listen about what's going on in the profession. So if you're part of the profession, we want to make sure you have this opportunity.
Yeah, I think it's a great call for the members in government and education. So more to come in our newsletter about that new offering for your colleagues. So we're gonna have a quick open forum here because we always end on time, and someone might want to watch the France-Morocco game. Not us. We'll get back to work here in New York. So Mark Peterson, I know there was maybe something that you wanted to touch on.
Yeah, it sounded like you were getting some questions about the tariff refund process, Eric, and we do have resources. And so I didn't have the QR code up on my slide, but we do have resources to go to. So much of the answers, though, are facts and circumstances. Even the question about what is the deadline to get into the refund process. It also depends on where you are in the process with customs, paying your taxes and duties and fees, whether it's before or after that. And so lots of variables that go into it. So it's not a simple question, but please go to the Resource Center.
Eric, I was sitting in the background throughout the entire show, and I saw a lot of questions about pricing methodologies and how to shift from the hourly billing model to the value billing or value pricing or subscription pricing. And so Just a quick point that Aaron Hartman is working on some resources around how to do that. We also know that that's a big focus for CPA.com. So we had tons of questions about that, but I wanted to let y'all know that we see them and we are developing resources to help stimulate those conversations.
Well, Lisa, one thing I'll say is that I think we've reached a tipping point here. You've been talking about value billing for 20 years. And now with some of these capabilities that are coming out, there's no choice. You can't.
Absolutely.
Something that took you 15 hours will take you a half an hour now because you're putting these capabilities in place, and you need to charge for the value.
Absolutely.
So with that, we're gonna Lisa and I will sign off. But Brandon, Chat, Aaron, Daniel, and Mark, great being with you today. So we just have one more slide here. Here's the resource area. We'll rebroadcast on Monday. Appreciate you taking the town hall survey. Lisa, thank you. Come by anytime, and look forward to being back with you in a couple of weeks. And when we get back together, we'll know who has won the World Cup.
Can't wait.
Go Argentina. Messi. All right, that's all for today.
Thank you for your participation. You can also subscribe to the AICPA Town Hall series on your favorite podcast platform, as well as watch archives on YouTube and find resources at cpa.com/townhall. Tune in for live broadcasts Thursdays at 3 p.m. Eastern Time.